I truly believe this battle is the reason why 90+% fail. We grew up with very little formal education on investing, let alone day trading in the financial markets. And generally speaking, we're told that like investing is good, we should probably do that, and trading or day trading is bad, and you're gonna lose money, you shouldn't do it, it's very risky. Now, for most, the idea of day trading never really crosses their mind, unless you have a gambling addiction, but you kind of hear that, you go, okay, well, why would I want to lose money voluntarily? I'm not going to do that, and you never think of it again. Not to mention, who has the time for that? Like, most people, we're talking about the average person here, is working a job and doesn't have the time to stare at charts all day long and watch the markets, and so day trading just doesn't make sense for them anyway. Like, I can't commit that time, so I'm not going to even think about it. What if I told you that that approach or that mindset is playing right into keeping you where you are and not allowing you to level up when it comes to your finances? Now, I know you may be thinking, like, what are you talking about? What do you mean? Hold that thought for a few minutes. Trust me, it will make sense later. But first, let's explain and define a couple things. Number one, the sponsor of today's video is Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Okay, so what is investing in the first place? Well, investing is you're putting money or something up, and you're trying to get that to return you money or increase in value in the future. That's what that really is. And the time horizons here, generally speaking, could be longer, but who's to say? Who's to say? I can make an investment that I want to sell in a year. I can make an investment that I want to sell in 20 years. I can make an investment that I plan to never sell and maybe just cash flow my portfolio at 2% per year cash flow on dividends, 5% per year on dividends that eventually, as I build it up, makes me enough money to survive and retire one day. I mean, that's an approach that you can use as well. In our context, we're generally putting money into ETFs, stocks, cryptos, something like that, that we see potential future value in. And I don't want to say that you have to have a fundamental approach, but generally speaking, investing would take on more fundamentals than day trading on average. But that's also stereotypical. Like, that's like the stereotypical investor tends to invest more on fundamentals versus the stereotypical day trader tends to just trade based off the charts. You know, but that's not everyone. That's just what we generally see in society tells us. Day trading is you're buying and selling in the same day. Now, I'll classify day trading and swing trading together because you can swing trade, and I would say it's the same thing. It goes under the same umbrella as trading. It's not the same as investing, but you're actively trying to get in and out based off of shorter term price fluctuations, based off of opportunities that you see per a strategy in the market. Could be fundamental, I guess, but many times it's usually much more technical in nature, but doesn't mean that it has to be. So like you can see on the surface, these are like the surface level differences, but you can see here, if you're sticking with me, how these lines are blurred and how it almost tricks you and they almost trick you into playing this game or to think you can play the game at the same time. And what I mean by that is we kind of get caught up in this investing, and then at some point, the deeper we get into an investing, at some point, someone tells us or we learn or we think, and we go, what if I could increase my chances, increase my at-bats, take more trades, and day trade and make more money? And now we come from this investing background. That's what we've been taught the most, even not very well, I will admit, going through our lives. We come at this trading thing with this investing background, and it's just not the same. Because trading is so much more about risk management. I'm not saying that investing isn't about risk management, but trading is so much more about risk management. It's so much more about making sure we don't lose a certain percentage on a given trade. Because if we do take that many more at bats, we are at risk of blowing an account or losing a lot more money faster, potentially, than investing. Now, obviously, we can put all our money in investments that all crash and burn, and that's possible too, but the chances of that happening are a lot lower than just taking 20 trades a day, losing 18 out of 20 a day, and then blowing an account like that. But what they don't tell you is that there are infinite ways to skin the cat, both on the investing side and the day trading side. So again, a similarity there, but they don't really tell us about what that entails. You can go into the weeds, and generally speaking, you could spend 5 minutes a month on your investments, if you really want to go about it that way, and just average what the S&P 500 or whatever ETF returns over the course of years. Now, over the past 100 years, the S&P has averaged roughly 10% per year. So if you just set up on your brokerage platform a recurring buy, you get paid every 2 weeks or whatever at your job, you set up a recurring buy for a percentage of that money that comes into your account, it automatically puts the money in your brokerage and buys whatever ETF you want, and you can just ride the average returns of that ETF going forward. Now, will we get 10% per year for the next 100 years? I don't know. Maybe, maybe not. Who am I to say? But that strategy takes no time. You could also go the route of many people like the Warren Buffetts of the world, or the big time investors that you hear, or even hedge fund managers, potentially. I guess some of them will be more active. It depends. You can go different routes and dive deeper into the fundamentals of companies. You can get insider information. You can work in Congress. Really, whatever you want to do to get your insight to make your investments, I guess, legally, you could. Now, insider trading is illegal, but what is an insider? Apparently, people in Congress aren't insiders. They found a way to do it. So you can dive deeper into the weeds and build out strategies there. And at the same time, on the day trading side, you can do that as well. You can dive deeper into strategies, and I would imagine that it takes a lot longer because you got to track the strategies, track your results. Like I always say, using a software like TradeZilla, discount code in the description, because when you track your data, you get an understanding of what you're doing, and now you have data to go off of and to utilize. So that can take a lot of time, and it could take people months to years and years, and then most will still never make it in the day trading world, or the trading world, the active trading world. So you really have the choice of how much time you want to commit and how much this is worth it to you. But where you start playing their game is when you start blurring the lines and thinking that investing and trading are either similar or can be approached with the same brute force mentality that we approach most things in modern society. And what I mean by that is more time means more money. The more I study, the more I learn, the more I try to improve my strategies, the more money I'm going to make. And to a degree, that is correlated. But you'll find the longer you're in this game, there eventually is a law of diminishing returns. And many times the curve cuts off the backside drastically as you kind of go over that hump. And your time and your efforts are no longer producing results that look linear or even exponential. And that's really frustrating. And that makes you think, I need to put more time in because I'm not doing it well. And it only exaggerates the downside that you see. And when I say we're playing their game, who is they? In this case, they represents a lot of people. It can represent market makers. It can represent hedge funds taking your money who know what they're doing. It could represent people who are trying to suck money out of you for a trading Discord group mentorship because they need you to be losing with the hope of one day making money in order for them to make money. So they covers a lot more than just the market makers or people on the other side of the market that were like fighting in a sense to make money, which really that's not how I would look at it, but to make it simple. So should you try to do both? I'd say no, at least at the beginning. And if yes, then make sure one of them, and more likely than not, it will be the investing approach, takes like no time, and you can automate that and play for pretty modest average gains and then see if you can compound that by building out a trading strategy if you really so wish to choose to go that route. But if you do go that route, or if you play the investing route, but you're trying to do better than the average, understand you're playing back into the same numbers where like 90+% fail. 90+% fail to make more money than the average. So it's the same thing. Yes, you're going the investing route versus the day trading route. They are different, but the overarching concept is still the same if you're trying to do something that's different than the average. Both ways, you got to have expectations that are somewhat realistic. And obviously we have maybe unrealistic goals at times, but understand like it's going to take work, it's going to take effort, and it's going to take time to build out these strategies that maybe will be able to make me money over time, but maybe won't, and then I'll have to make some critiques from there. The worst thing to do, though, is to compare yourself to they, or to compare yourself to others. And it's not something that I want to harp on too much in this channel, because I think that the majority of the videos here are much more tutorial, educational focused. But when I say comparison is like, they say comparison's the thief of joy, comparison is the root of your failures, I mean that in like, for example, my last year, I roughly, based off my calculations, made about 14% in my trading account. Now, this is active trades. This is not investing. This is active trades. The overall S&P was up like 20+%. So you could sit back and say, oh, well, you didn't perform the average. Well, it's also not the same thing. I'm trading. I'm not investing in the S&P. This is my trading data. But in my view, I see it as, well, it was profitable, A, and 14% is all relative. If I was trading with $10,000, that might not be a lot of money. But if I was trading with $100,000, if I was trading with $500,000, $1 million, $10 million, you do the math. What is 14% of those amounts? And as time goes on and you are able to accumulate larger position size or larger capital, then the percentage is not really that important. It's something that I can maintain. It's realistic. It's not a crazy, I'm trying to make 700% this year, which obviously is possible, I guess, and people do it. But is that sustainable? Probably not. It's not going to be lasting long term. But if I can maintain a 14% return on average every year, I'd be happy with that as I scale my account, as I scale my capital. So it comes down to setting expectations and then understanding what it will actually take to achieve those results. And as time goes on, you'll get better, you'll get a better feel, you'll have better understanding, and you'll probably spend less time on your individual strategies, but you ultimately determine where you want to spend your time and what makes the most sense to you. I will leave any links, resources, and the sponsor of today's video down below in the video description box. If you're looking for a video to learn more about the differences between swing trading and day trading, check out the video up on the screen now, and I'll see you guys in the next one. Peace.